Okay.
The 11/1/16.
Right.
The original noting by Mr. Sharma, November 24, 2015, and the Defense Secretary's, then Defense Secretary's notation in hand is 1/12/15. Several days elapsed. And what does Mr. Parikar say in this handwritten note? It appears that PMO and French President's office are monitoring the progress of that's the cover-up version, monitoring the progress of the issue, which was an outcome of the summit meeting. Paragraph 5 appears to be an overreaction. And then comes the punchline, the non-committal punchline. Defense Secretary may resolve issue stroke matter in consultation with Principal Secretary to PM.
Right.
Parikar signs it and all these guys sign it.
No.
This is not monitoring.
Sure.
These are parallel negotiations.
Okay.
Which are essentially taking place behind the backs of the Indian negotiating team.
No, Mr. Ram, I'm sorry to interrupt you, but just a quick clarification, sir. While the story may not materially be about Mr. Parikar, but did you have access to that noting that Mr. Parikar has made, the one that you just quoted?
I don't have to answer that question, do I? Yeah. It's an ongoing investigation, and we have made it clear that we have access to a lot of documentation. And so I don't have to answer that question, because what we deal with in each story is entirely up to us, and people can judge it. It's a desperate attempt by the government to sort of divert attention from the fact that there was an allegation of parallel negotiations. Parikar, of course, tries to moderate it and says overreaction. He doesn't say it's wrong. It's an overreaction. He doesn't take a stand on any issues. So it's a desperate attempt to say how I should do the story.
Okay.
No, yeah. And it's very clear from the facsimile we published that it is a segment to the note.
Right.
Yeah.
Mr. Ram, my second question to you, sir, and this is basis the conversation that I just had with the former Deputy Chief of the Air Staff, Nirdosha Tyagi, and he says that, as part of a government-to-government transaction, and this was a government-to-government transaction, it would not be unusual for the Prime Minister's office to be overseeing, monitoring, whatever word you would like to call it, the proposed transaction. He also goes on to say that while the Ministry of Defence may have had an objection with certain aspects related to the bank guarantee or the sovereign guarantee, it is not unusual for India to have done deals without a sovereign guarantee.
This is not monitoring or keeping an eye on the progress of the negotiations or otherwise. This is a direct intervention which overrides the position taken by the negotiating team. And they protest against this. And it's not mild language that the then Defense Secretary uses.
Yes.
He says undermines our negotiating position seriously. That's put down in writing. So it's not some garden variety standard, keeping an eye on this, but actually going against, putting out contrary positions on key issues, and in this case, sovereign guarantee or government guarantee or the bank guarantees, and also on the arbitration arrangement.
Right.
And this has to be read along with the objections raised within the negotiating team. That was also withheld from the Supreme Court. All that information, this was never mentioned to the Supreme Court.
I will leave it there. Appreciate you joining us, N. Ram there of The Hindu. Now, the other big development, and this might provide some relief to the startup community, there could be reprieve in store on the angel tax front. Representatives from the startup community met CBDT and DIPP officials to try and discuss ways of providing more relief to the sector, which has been haunted by the ghost of the angel tax, as well as Section 68 in the recent past. We learned that the exemption limit on the angel tax could be hiked from 25 crore rupees to 50 crore rupees. Rituparna Bhuyan, who's been tracking that, joins us now with more. Ritu, we could expect a new notification from the CBDT as early as Monday or perhaps even Tuesday. What are you picking up? What could be the changes?
This meeting in which DIPP, startups and CBDT officials participated looked at various options through which relief could be given to startups facing the angel tax issue. The notification on this is likely next week, perhaps by Monday itself. Now, the proposals which were discussed today in this meeting and which most likely will be mentioned in the notification that will be issued by the government include these. Firstly, the definition of startups that will be changed, and that will involve two things. Firstly, the current validity will be increased from 7 to 10 years. That is one. And secondly, the revenue threshold for a startup will be increased from 25 to 50 crore. More importantly, as far as Section 56, the issue is concerned, which is more popularly known as the angel tax issue, herein a blanket exemption will be given up to a certain limit. Now that limit is yet to be finalized. CBDT and DIPP will work out that limit, but it will be between 10 to 25 crores. So within a revenue within revenue of within this range, perhaps the startups will get blanket exemption as far as angel tax is concerned. Very important proposal that was discussed with the startups was finding out modalities for listed companies to invest in startups. Now for that, DIPP will work out certain modalities so that listed companies can invest in startups without attracting provisions of Income Tax Act. Then again, as far as Section 58 related, Section 68 cases are concerned, through which notices were issued by the IT department, even there some relief will be worked out. A separate circular will be released. The idea here is to establish creditworthiness of the investor. So either the startup will have to submit those documents of the investor, or in cases if the startup is not able to submit, then the assessing officer can then ask the investor to produce those documents, basically to establish creditworthiness. Last but not the least, there will be a self-declaration form through which startups will have to tell the government that they will not be investing the money that they have got from investors in certain asset classes. These asset classes are mostly used by shell companies. So again, these modalities will be worked out, and we will see this notification next week, most likely by Monday. With that, it's back to you.
Okay, let's go across to Nakul of iSpirit. Nakul, thanks very much for joining us. You were part of that meeting. Is there hope that we could see further relaxation, some changes? We're given to understand from our sources that the exemption limit is likely to be hiked from 25 crore rupees to 50 crore rupees. There could be more disclosure requirements for startups and some other relaxation that could be announced by the CBDT perhaps today or maybe even Monday.
So thanks so much. I think the meeting which happened about 20 minutes back was very, very helpful, because I must compliment Mr. Ramesh Abhishek and his entire team to try and solve this entire thing completely together. Many things, all the things which were asked by the startups in terms of maybe turnover limit or anything else are being actively looked at. And I feel that whenever DIPP does release this, it will be a very good form of medicine for all the startups as well.
Okay, so we are expecting that notification from the CBDT, but specifically, Nakul, on the issue of coercive action, I mean, the CBDT has previously issued a circular saying that no coercive action should be taken, but today on the program, we have two cases, Pushpinder Singh, founder of Travel Khana, and Siddharth Aluwalia, the founder of Baby Gogo, here on the program saying that, in fact, coercive action has been taken under Section 68 and 56. Was this brought up at all? Was this taken up with the government?
Yes, this was very much taken up with the government, and we had the CBDT officials in the meeting as well. And what we also got to know that the action which has been taken under is being taken under Section 68 and not Section 56. And the notification of the 24th of December pertains only to Section 56. However, I think the Income Tax Department is looking at trying and give some form of relief to the two cases which you mentioned. And as in when DIPP does come up with a notification, it seems they will be taking out notification for all the existing startups which have got orders, in fact, that at the time of appeal, the new regulations should be considered.
Okay, that at the time of appeal, new regulations should be considered. This could be part of the notification that the CBDT may issue. But Siddharth, let me come to you as well. How confident do you feel that on the back of the changes that are likely to be announced, we will finally see at least a large chunk of the issues that have been cropping up week after week, month after month being addressed?
So I see hope that government will fix things up, especially
the DIPP is actually taken.
Yeah, go ahead.
Taken into consideration most of the demands of the startups, including changing the definition of what a startup is, making a blanket exemption up to a certain amount, which I believe in turn will bring massive amount of relief to most of the startups. The solutions that were actually proposed and spoken about during the meeting today will actually go in giving relief to about a majority cases, as you mentioned as well. Even in terms of Section 68, they will be issuing a separate notification itself and a clarification stating that in case any startup gets a notice under 68, either the startup can respond to it or the investors can actually respond to it, which will go a great way in actually reducing the amount of friction between startups and the department, and the unfortunate cases that arose as of now of the two companies you mentioned as well will actually get sorted out with the upcoming notification, hopefully.
Now, two startups have claimed that the government has frozen their accounts after deducting money for angel tax. Travelkhana, which is backed by venture capitalists, claims that its accounts were frozen after a 2 crore rupee notice from the tax department. The company also claims over 7 lakh rupees were deducted from one of the accounts. Baby Gogo has also received a tax notice after raising 2 crore rupees. The founders of both companies spoke to CNBC TV 18 about their tax troubles.
We received a scrutiny notice on 8th of October 2018, and we were duly replying to the information that was asked. Amongst the set of information, another set of information was under Section 68, which meant that we had to prove the genuineness of the investors. So we were replying to that. During that time, on 11th of December, we got an assessment order stating that we have a tax liability of 2.5 crores on our account based on a money that was raised in assessment year 16-17. And on 5th of February, 4 people came to our bank. They actually locked all the accounts. They created a demand draft, extracted all the money. So in various accounts, there were 33 lakhs. They extracted all that 33 lakhs and took it away.
2 months ago, we received a notice from the income tax department regarding that this amount is payable by income tax. So 72 lakhs was the amount. We raised more than 2 crores of investment. So 30% that was the department claim as an income tax to us. And yesterday what happened, I checked that 72 lakhs has been debited from the bank account of Baby Gogo, and it has been debited through a demand draft in the name of Assistant Commissioner of Income Tax. So they needed information on all the angel investors. So we had around 15 angel investors. So they needed PAN cards of angel investors, their statement of account, that where had they invested their amount through, like what was the source of income of the amount they invested, and we provided all the documents.
Now, shifting focus to Tamil Nadu, the southern state has seen its state budget being tabled in the assembly, with Finance Minister O. Pannirselvam announcing that the soaring revenue deficit was down by 25%. While there were no new taxes in this year's budget, however, Tamil Nadu's reputation for a larger-than-life election SOPs also took a bit of a backseat. Jude Sane joins us now with the key highlights of that budget. Jude, so take us through the fine print.
Well, the good news, like you rightly mentioned, is that Tamil Nadu Budget 2019 projects revenue deficit to be just about 14,315 crore rupees for FY20. This, remember, is a far cry from the 19,000 crore rupee mark that it breached in FY19. But on the not-so-bright side, fiscal deficit continues to hover around 44,000 crore rupees. And this, remember, is rather alarming considering it's 2.56% of the state's GDP. But what does Budget 2019 for Tamil Nadu really have for the taxpayer? Firstly, no new taxes, and that's not surprising considering it is, of course, an election year. But interestingly enough, there are no new poll SOPs either. 85,000 crore rupees has been set aside for the payment of salaries and pension for government employees in the state. 6,000 crore rupees has been set aside as far as food subsidies are concerned, with special focus on free rice distribution, which of course is a signature scheme in Tamil Nadu. A little over 1,000 crore has been set aside for former Chief Minister J. Jayalalitha's pet free laptop distribution scheme. And bringing up the rear is 491 crore rupees that has been set aside for the distribution of free dhotis and saris in the run-up to elections 2019. So there you go, Tamil Nadu budget. No new taxes, but no new SOPs either. Back to you.
Okay, Jude, thanks very much. But let's head across to Karnataka now, where Chief Minister H.D. Kumaraswamy, who also holds the finance portfolio, presented his second budget in the Vidhan Sabha today. This even as the opposition staged a walkout. The JDS Congress government has an estimated expenditure of 2.34 lakh crore rupees for the upcoming fiscal. Mugdha Variyar gets us the highlights.
Karnataka Chief Minister and Finance Minister H.D. Kumaraswamy presented the state budget today for FY 1920 on a day marked by intense political chaos, with the BJP opposition members staging a walkout and the Congress party moving to disqualify 4 MLAs for not turning up for the budget session. But that apart, the focus of the budget today was on the farmers, especially on the Chief Minister's farm loan waiver scheme, with the budget this year provisioning rupees 6,500 crore for the waiver of crop loans of farmers to commercial banks and rupees 6,150 crore for waiver to the cooperative sector. Overall, the total grant is of rupees 46,853 crore. This brings the budget's estimated expenditure to rupees 2,34,000 crore, which is 7% higher than the revised estimate for FY 19, and brings the fiscal deficit at 2.65% of the gross state domestic product, which stands at rupees 15.8 lakh crore, and the total liability will stand at 20.6% of the gross state domestic product. Now, there were a lot of announcements for Bengaluru city, with rupees 8,500 crore for the Nava Bangalore Kriya Yojana for infrastructure development, rupees 23,000 crore for the suburban rail services, and rupees 1,000 crore for the construction of elevated corridors. And there were also some incentives and support announced for startups and the information technology sector. Some of the other key highlights were the grant of rupees 950 crore for the Ayushman Bharat Arogya Kara Karnataka, the rupees 50,000 crore capital investment for an industrial node in Tumkuru, and an additional excise duty on beer and rot beer in the state.
Mugdha, thanks very much for that. As she was mentioning a chaotic day in Karnataka's assembly, the Chief Minister accusing the BJP of attempting to poach one of its MLAs. BJP denies the charges. That and more when we return.
In case of indirect tax, and which is consists mainly of this GST, during the last 1.5 years, many rationalizations have been done. Rate adjustments have been done. So this year, yes, our original budgetary estimates were higher. And in revised estimates, we have, again gone realistic. The GST, as we all agree here, that it is one of the biggest tax reforms where all states and center, they have come together on a common portal. They are filing up the taxes. And then there are many dynamics, many adjustments have taken place recently. We want to be realistic, and that is why the next year figure is also realistic.
Banking partner, IDFC First Bank. Digital partner, GeoTV.
Retirement is more than another financial issue to be worked out. It's not just about the money, but adventures like never before. Get a wholesome perspective on acing the retired life with CNBC TV 18 presents Mindful Retirements by the accomplished financial life planner Kiran Telang. Book your copy now.
Delegates from Africa and India converged to build strong foundations for economic growth and promote entrepreneurship in the textile industry. Watch ITME Africa 2020 at these times.
Presented by India ITME Society.
There are many tools today to help you reach your destination. But there is only one tool that guides you towards your financial destination. CNBC TV 18. India's #1 English business news channel. To keep watching CNBC TV 18, call your cable or DTH operator and subscribe now for just 4 rupees per month. Follow the leader.
Welcome, you're watching CNBC TV 18 and this is India Business Hour Plus. Now, former RBI Governor Y.V. Reddy today spoke up for the RBI's autonomy on several issues. At a speech delivered in Pune's famed Gokhale Institute, Reddy said that if the government wants to help SMEs, the money should come from budgetary sources. It should not ask the RBI to design a package that banks have to obey. The former governor also spoke out on issues like the RBI's capital and the government forcing the RBI to change its prompt corrective action rules for banks. Lata Venkatesh has more on that.
Well, actually, Dr. Reddy's speech is a massive 32-page account of the historical relations between RBI and the government from the time of its inception, from the time RBI was nationalized by the government before independence. But what is interesting is his comment on the current 5 problems, as he puts it, between RBI and the government, and he comes out very strongly in favor of the RBI. First, he speaks about the SME package. He says a package to help SMEs should come out of budgetary resources. The government cannot mandate the RBI as banking regulator to prepare a package which is mandated on banks. The underlying assumption being the depositor's money is not something on which the government should make rules in favor of any sector. The second point he raises is on RBI's capital. While he admits that there is a committee looking into it, he says the idea mooted by the chief economic advisor that RBI's capital should be directly transferred to banks to capitalize them is constitutionally improper because the RBI's capital, its dividend, is the property of the Consolidated Fund of India. So Parliament should have a right to rule over it. It cannot be directly transferred to the capital of banks. On Basel III rules, which is, faced a lot of criticism with the government saying that RBI is being holier than thou by recommending higher capital than Basel requirements. He says that it is required in India because in India the ability to recover money from a defaulter is very less compared to international standards. The loss given default is very high and therefore higher capital norms are required in India. With respect to the demand that a line of liquidity be given to NBFCs when they are in trouble, he takes the IL&FS case and he says it is not a liquidity issue, it is a solvency issue. IL&FS has probably become insolvent because some of the loans will not be returned at all. It is not a liquidity problem, it's a default problem. And finally, with respect to the powers of the board to dictate to or order the RBI governor, he says the composition of the board, the method of selection is such that it cannot be given, it is composed in such a way that it has to be advisory. If it is going to get mandatory powers or powers to mandate the governor, then we have to have a comprehensive review of how the board members are selected, how the governor is selected, and what should be the responsibility of the governor. He can't be asked to, deliver on certain issues and the board dictates to him, but the board is not coming before Parliament and being answerable. So a comprehensive review of everybody's powers is needed if the board is going to be made more powerful than the governor. It's a very powerful speech coming to the aid of RBI on several issues.
Right, Lata, absolutely. Many thanks for joining us with all the details of what Y.V. Reddy did say, in fact, at the Gokhale Institute. In fact, just today, Finance Minister Piyush Goyal told leaders of India that the government is trying to get banks out of prompt corrective action framework. Goyal was in Mumbai to meet with industry leaders after he presented the union budget last week. He stressed on the need to not curb bank lending for industries to grow, especially small businesses. He also added that government has taken steps to prevent wrongful investigations against bankers.
ये 8-8 महीने वाला लोन रिन्यूअल लोन सैंक्शन ये सिलसिला बंद होगा मैं आपको पक्का विश्वास दिलाता हूं और राजीव जी इस पे आप पर्सनली मॉनिटर करेंगे जरूरत पड़े तो एक वेबसाइट बनाओ मोबाइल ऐप बनाओ किस दिन अप्लाई किया किसी ने लोन के लिए रिन्यूअल के लिए वर्किंग कैपिटल एनहांसमेंट के लिए और क्या क्या कार्रवाई हुई क्यों डिसीजन नहीं लिया जा रहा और अगर किसी का कंसोर्टियम में पीसीए बैंक है जिसमें कोई शायद रिस्ट्रिक्शंस हैं सरकार कोशिश कर रही है जल्द से जल्द ये पीसीए बैंक निकले पर अगर कोई पीसीए बैंक है और नहीं दे पाता है तो रजनीश जी आपको सबको लीड लेनी पड़ेगी बाकी जो नॉन पीसीए बैंक्स हैं उसी प्रोपोर्शन में उस लोन को ले लें.
And on to politics in Karnataka, where Chief Minister H.D. Kumaraswamy has claimed that the BJP is trying to poach MLAs from the Congress and the Janata Dal Secular by offering them ministerial berths as well as money. Now, Kumaraswamy has released 2 audio tapes today and alleged that former Chief Minister and State BJP President Yediyurappa was trying to woo rebel MLAs with prime positions in the government. The BJP, however, has dismissed those allegations as concocted and fake.
Today I demand the Prime Minister of this country come out of your real face to this country. Who has encouraged your leaders to topple Karnataka government? I am exposing the material now. How these BJP friends achieved in 55 months compared to Congress 1947 from the 1947 their achievement.
If they, why they are worrying? They must keep their MLAs together, Congress and JDS. Let them continue. Let them do the good work for the welfare of the people of Karnataka. Even today I am telling you more than 10 to 11 MLAs from Congress, JDS, they are not going to attend today's meeting. Okay, today's assembly session. Okay. Same thing happened yesterday and day before yesterday also. Where are they? Is it my responsibility to bring Congress, JDS, MLAs to the assembly?
And the Supreme Court today pulled up BSP Chief Mayawati for erecting statues using public funds. Responding to a PIL, the Apex Court said that it was of the tentative view that Mayawati should reimburse the money spent on installing statues of elephants, which is a party symbol across Lucknow as well as Noida. Now, the next hearing is scheduled for the 2nd of April. And on that note, we slip into a short break. Coming up on the other side, a panel of finance ministers on real estate proposes to cut taxes on under-construction residential properties as well as affordable housing projects. What will the impact be on the consumer? We'll bring you a special discussion on the other side.
The market works 5 days a week, and so do you. So how do you ensure that your money works 24/7? Join us on a brand new show as we show you how to build your fortune no matter how the market is faring. From choosing the right mutual fund to understanding how long to stay invested to personalized answers for all your queries. We'll give you a complete rundown on how to make money with mutual funds.
Mutual Fund Corner at these times on CNBC TV 18 and CNBCTV18.com. CNBC TV 18 is India's #1 English business news channel. To keep watching CNBC TV 18, call your cable or DTH operator and subscribe now for just ₹4 per month. Follow the leader.
Welcome back. Let's also get you the other big story that we're tracking this evening. A panel of state ministers led by Gujarat Finance Minister Nitin Patel has recommended that 5% GST without input tax credit be levied on under-construction residential houses. Now, remember, under-construction properties are currently taxed at 12%. Further, the group of ministers has recommended 3% GST be levied on affordable housing without input tax credit. So what impact is it going to have on the real estate sector? Shireen Bhan is here with 2 very special guests. Over to you, Shireen.
Thanks very much. Joining us now, Rajiv Talwar, the CEO of DLF. Also with us, Prateek Jain, leader indirect tax at PwC. Gentlemen, thanks very much for joining us. This has been the recommendation of the group of ministers. It will now be up to the GST Council to ratify this. Usually they go along with what the GOM says. But Mr. Talwar, let me start by asking you, the decision to allow 5% GST without ITC for under construction properties, also decides to recommend 3% GST for affordable housing without ITC. How significant is this going to be?
I think it's a very valuable piece of recommendation for one reason which probably you've missed out, and that is that 80% of the material which will go into the construction of any building will have to be taken from GST registered dealers. So this would be the best method, whether it is for affordable housing or for any kind of housing and construction, that buildings which are going to be made will be in the regular streamline and the line of GST, and eventually will fall prey or become a part of the market which is considered above board and which is totally regulated and recognized transaction. So I think this is a very valuable recommendation. Yes, only one point to be made along with it, that all the contracts currently attract a GST of 18%. As you know, the developers are a separate company, whereas contractors are very often a different company. So I think this is time that even contracts for construction should be brought into the 12% GST slab rather than keeping them at 18 at the moment.
Okay, what is it going to mean as far as the consumer is concerned, Mr. Talwar? You gave me a sense of what this means for industry, but what will this mean for the consumer as and when this is ratified by the GST Council?
I don't think it will have an impact on pricing at all. There was a certain levy which was being paid earlier. After all these were subject to service tax, and they've done it. Everyone used to say that about 4.5% is always there, even with an abatement which was so large as 66%. But I think now what will happen is that they will be given a relief. So therefore, there will not be an impact on the affordable housing segment, and 5% is about what was being charged earlier.
Okay, Prateek Jain, what are the challenges that you foresee with this? And we've discussed this business of, doing away with the ITC. We saw it for several other sectors as well. What would you see as the big challenges as and when the GST Council ratifies this recommendation of the GOM?
I don't think that from a policy standpoint it's a good idea. I think it's a quick fix solution. It's never a good idea to restrict input credit for any sector, and more so for real estate, because real estate is a sector which you need to formalize more. It basically incentivizes, the real estate player to really get the cash component back. And also what will happen is that your base price will need to increase. So let's say if you're selling at 5,000 rupees per square feet and you're applying 12% tax, and let's say 300 rupees per square feet as your, let's say, input credit, you have to increase the base price from 5,000 to 5,300, and then the question customer will ask is why base price has increased, and you will say my input credit loss, and they'll say okay, show me the proof. And we have seen that in restaurant sector where anti-profiteering has become a big issue for the sector. So any customer can go and file a complaint that I'm not sure why the base price has been increased. So it complicates. And also, when you tomorrow, after 6 months or 1 year or 2 years, if you want to get this sector back under mainstream GST, then it will be that much more difficult for the government. So instead of doing this, and even if composition has to come in, maybe there should be an option provided to the industry that if they want to follow the mainstream but with input credit and all that, then reduce the tax from 12 to 8 for the sector and give them an option rather than making it compulsory. The only good thing which I think has happened, and I have not seen of course the recommendation, that if the recommendation is that 80% has to be bought from the GST registered vendors, then at least to some extent it would mean that you're dealing with a more compliant vendor ecosystem.
Appreciate you joining us here on the CNBC TV 18 special discussion on the recommendations made by the group of ministers on GST.
Right, Shri, many thanks for taking us through that conversation. On to the day's trade, where markets have snapped a 6-day gaining streak. So the Nifty went back below the 11,000 mark on Friday, while the Sensex slipped over 400 points. Now, Tata Motors fell 18% and ended at an 8-year low after reporting disappointing earnings. For the week, though, both the Nifty and Sensex ended flat. And telecom regulator TRAI has once again defended the new tariff regime for television. The regulator is promising 10 to 15% savings for metros. The regulator also went on to clarify that the second or multiple TV connections, the network capacity fee of 130 rupees is not mandatory. Ashmit Kumar joins us with more details on that. Ashmit.
Well, ever since the new tariff regime was rolled out on February 1st, there have been more questions than answers. The TRAI has been battling with those questions, and here's one question that was, in fact, that TRAI is seeking to answer as to what happens to the NCF or the network capacity fee on the second or the third or multiple connections with respect to the same household. That question has been answered by TRAI. TRAI has said that the NCF or the network capacity fee of 130 rupees for the 100 SD channels will not be mandatory for the second or multiple connections of the same household. This is a key clarification that is coming in. In fact, the TRAI goes a step further and says that there are already operators that are completely waiving off the NCF entirely, that is something that can be done. Discounts can be offered. The only two caveats that have been brought in by the TRAI is that any discount that will be brought in will have to be uniform across the target market and will have to be made known through the respective website of the service provider. Those are the only two caveats. But importantly, the TRAI clarifying that the NCF or the network capacity fee of 130 rupees for the second or multiple connections of the same household can be in fact discounted and waived off entirely if deemed fit by the service provider. That's not all. The TRAI went a step further and saying that they firmly believe that this is a pro-customer move, that this will ensure fair competition between the broadcasters. On the pricing front, they said that the TRAI believes that the prices will fall by as much as 10 to 15% in metros, will fall by 5 to 10% in non-metro areas, and that in the longer term they do feel that the market dynamics will play out in a manner that will in fact reduce the prices. That's of course what they're saying on the record. Off the record, they sound even more confident, saying that it's only a matter of a few weeks before the prices that we are currently seeing taper off. So that's the TRAI expressing confidence, clarifying on the NCF component of second to multiple components. Of course, there are very many questions that still need answering. We'll of course find out in the days to come if this move brings in any more clarity. Back to you.
Right, Ashmit. Many thanks for bringing us clarity as far as that tri-tariff is concerned. On that note, we'll slip into a short break. Up next, Anil Ambani's Reliance Group cries foul after L&T Finance and Edelweiss sell some pledged shares, but both companies hit back saying they were left with no choice and that the action was legal. We'll bring you all the details on the other side.
CNBC TV 18 is India's #1 English business news channel. To keep watching CNBC TV 18, call your cable or DTH operator and subscribe now for just 4 rupees per month. Follow the leader. A perfect 10, you'll never know from the outside. That's why we go beyond the glitz and glamour of automobiles to give you the real picture. Good, bad, or ugly. Because we know that to really appreciate your car, you have to go beyond her surface beauty. Overdrive, India's most authoritative guide to automobiles. At these times, only on CNBC TV 18 and CNBCTV18.com.
Welcome back. You're with us on India Business Hour Plus. Now, a quick look at some other headlines that we're tracking. So, State Bank of India slashed home loan rates a day after the RBI cut its repo rate. The rates have seen a marginal cut of 5 basis points for home loans below 30 lakh rupees. And Anil Ambani's Reliance Group has issued a statement alleging that L&T Finance and Edelweiss Group entities have invoked pledge of listed shares of the group and made open market sales of about 400 crore rupees from the 4th to the 7th of February. The Reliance Capital has called the action illegal, motivated and wholly unjustified. But Edelweiss and L&T Finance have hit back saying that the share sale was